Could Japan shake the entire world economy? Some experts are saying yes. Now you might wonder, how does Japan affect my money, my job, or my family here in Canada? The answer is more than you think. Today, we'll look at Japan's quiet but real money troubles. We'll show how these problems could hit the global economy. Most importantly, we'll explain what it means for you and your money right here in Canada. So grab your coffee or tea, because by the end of this video, you will see why Japan's economic story might be the most important you hear all year. Let's start. So, what's happening in Japan right now? Japan is the world's third biggest economy. It's a tech giant and a cultural powerhouse. But it's facing huge money problems. For decades, Japan was known for its innovation and strong exports. It even got through tough times called lost decades. But things are now more challenging. Just this week, Japan's government struggled to sell 40-year bonds. They need to sell these to raise money, but investors are holding the money back. Now, this hesitation is a big warning sign. The yields or returns on these long term bonds have hit 3.675%, which is a record high. Now, for those who are new to bond markets, a bond yield is simple. A bond is like an IOU. When you buy a government bond, you lend money to the government. The yield is the interest you get back. When yields go up, the government has to pay more interest to find lenders. Now, this makes borrowing much more expensive for them. It's like your mortgage rate suddenly jumping up. So, why does this matter so much? It's a clear sign that investors are losing trust. They worry about Japan's huge national debt, and it's truly staggering. Japan's debt to GDP ratio is over 250%. To compare, the average for rich countries like the G7 is around 120 to 130%. Now, in the past, Japanese banks have held most of the debt. This gave some stability. But now, even Japanese investors want higher returns to take on the risk. Now, this puts the government in a very risky situation and a very tricky financial spot. They are borrowing less for long terms. Instead, they borrow more for short terms to avoid today's high interest rates. Now, this strategy is something which I have warned against in my other videos as well. It's like using a high interest credit card to pay off a home loan. Now, it might help for a moment, but it just delays the problem. It often costs more later and makes finances weaker. Now, it shows that Japan is in a tough spot. They hope the economy improves before they must borrow even larger amounts at possibly higher rates. If not managed carefully, this can create a bad cycle. Paying off debt could take more and more of the national budget. Now, this leaves less for important services or for growing the economy. Now, let's look at the global trade problems and tariffs. Now, these are special taxes. And this isn't just Japanese problem anymore. It affects the whole world. US has previously imposed substantial 25% tariffs on foreign-made cars, with Japan often being a primary target. Now, these kinds of tariffs and trade disputes continue to shape global markets. While leaders can change, the reason behind these taxes often stays. The goal is to protect local businesses, bring back factory jobs, and change global supply chains. Now, these tariffs are not just words, they have real economic impacts. Japanese car makers like Toyota, Nissan, Honda, they are selling cars worldwide. Now, they must rethink how they build things. Instead of making most cars in Japan and shipping them, they are moving production out of Japan. They are going to places like UK, Europe, and North America. And they are doing this to avoid these high taxes and keep selling cars in key markets. So, what does this shift in production means for the global economy? I'm going to break it down now. Number one, supply chains are shifting. Now, this is a huge change. It means big challenges in how goods move. Factories are moving, new suppliers are needed. Workers in different countries must be trained. Now, this process is not efficient right now. This leads to delays and higher costs. Car prices could also rise now. Tariffs are basically an extra tax on imported goods. Most times, this cost is passed on to you, the buyer. Now, this makes car more expensive even if some production moves. Japanese exports also could decline very soon. If it becomes too expensive or hard to send goods from Japan because of these trade taxes, Japan will sell less to other countries. Now, this will directly harm Japan's trade balance and economic growth. And along with that, global trade flows are also being disrupted now. This is not just about US and Japan anymore. Most countries are considering or using similar protective measures. This makes global trade less open and less efficient. This hurts global growth and everyone's well being. Now, this move to make things closer to home means resources are not used as well globally. This could mean higher costs and less new ideas over time. Alright, so you might be thinking, that's interesting, but what does all this mean for me living here in Canada? Now, that's the key question. And the answer is quite a lot. Canada depends heavily on its global connections. We are a part of a complex global network. What happens in Tokyo or Washington or Beijing always affects us too. Let me explain 5 specific ways these changes in Japan could directly affect you, your money, and Canada's economy. Canada relies heavily on trade. Over 65% of our GDP comes from buying and selling with other countries. We need stable global supply chains for everything. This includes raw materials and finished products. If Japan's exports slow down due to taxes or money problems, those key supply chains break. Now, this hurts Canadian businesses that use Japanese parts. Think of our car industry. Many Canadian car factories use special parts from Japan. Electronic companies and businesses using advanced Japanese machines also rely on them. If this becomes harder to get, more expensive, or delayed, our own production here slows down. That can mean less production, potential job losses in some areas, and higher input costs for Canadian businesses. It's like a small rock dropping far away and the waves eventually reaching our shores. The Japanese yen is getting weaker. Now, this could make Canadian dollar seem stronger against it. But a strong Canadian dollar is not always good for our economy. In fact, a strong loonie can really hurt our exporters. It makes Canadian goods more expensive for other countries to buy. Now, this makes it harder for our main exports like lumber, oil, natural gas, farm goods, or factory items. Now, if other countries buy less from us, it means less money for Canada, less profit for businesses, and sometimes job cuts in export industries. For example, if Canadian wheat becomes too expensive for Japanese buyers, they might buy from Australia or the US instead. Japan is a huge foreign investor worldwide, including in Canada. Japanese companies and funds have large holdings globally and a notable presence here in Canada. If Japan faces a deeper money crisis or if its economy slows a lot, Japanese firms might pull back their international investments. Now, this includes money in Canada. This could affect many areas where Japanese money has been involved. This ranges from big building projects in our cities to major energy investments or even funding for new tech companies. Less Japanese investment could slow the growth in these key areas. It could also affect job creation and overall economic growth here. For instance, if a Japanese real estate company stops a new building here in Toronto due to money worries back home, that directly affects construction jobs and local economies over here. Now, this really affects your wallet directly. With trade taxes, supply chain problems, and currency changes, expect the prices to jump around for imported goods. This is especially true for popular Japanese products like cars and electronics. And as I said earlier, if tariffs make Japanese cars more expensive or if currency changes push up electronic costs, Canadians will feel it. You might see a higher price on that new car or TV. Now, this adds to rising prices for everyday items, making life more expensive here in Canada. We've all felt rising prices lately, and these outside factors add a lot to the difficulty. Finally, Japan's problems could spread to global bond markets. Japan holds many US government bonds. Now, if they start selling those bonds to get cash, it would flood the market. This would push down bond prices and push up interest rates, not just in the US but everywhere. Now, this would make borrowing more expensive for governments, companies, and people worldwide. This would put big pressure on central banks, including our very own Bank of Canada, to be careful with interest rates. Now, we are already trying to balance stable prices with economic growth. If global borrowing costs rise because of Japan, it makes it harder for Bank of Canada to manage our economy. Now, this directly affects your mortgage rates, credit lines, and other loans. Knowing about these global pressures is crucial for your personal money planning. Now, let's look at the bigger global picture. If Japan, the world's third largest economy, struggles a lot, global financial markets and economies will feel it deeply. Japan holds many US Treasury bonds, and if they start selling those to get cash, global interest rates are going to go up. Think of the wide effect on global debt markets, on borrowing costs for developing countries, and on bank profits worldwide. A weakened Japanese economy means less demand for imports. This affects countries from China to Canada to Germany. Japan is not just a seller of goods, it's also a huge buyer. If Japanese people and businesses face economic hardship, they will buy less from other countries. This drop in global demand can slow down world economic growth. Now, in some cases, it can even cause prices to fall for all countries that trade with Japan. Less buying in Japan means less demand for everything from Canadian raw materials to German luxury goods. Global investor confidence also gets hurt. Financial markets, they dislike uncertainty. When a large, developed economy like Japan, usually seen as a stable economy, shows ongoing problems, it can make international investors lose trust. This risk off feeling often means investors pull money from riskier investments. They look for safer places or just sell off investments across markets. This can cause big sell offs in stock markets, currency markets, and bond markets. Now, this would not just happen in Asia but could also spread to Europe and beyond. This global spread of problems is a real risk. Investor panic can spread fast in our connected financial world. It can make everyone hesitant to invest, slowing down money flow and economic activity globally. Okay, so with all this information, what should you do as a Canadian? Panic? Absolutely not. That's the opposite of what we do over here. My goal is to inform, equip, and empower you, not to scare you. We need to be aware, stay calm, and make smart, planned decisions. Now, here are 5 practical things to remember to make your money stronger in these uncertain times. Number 1, watch the yen and oil prices. The Japanese yen has often been a safe place for money when the world economy is uncertain. But if Japan looks unstable, that safe status could be lost. If money leaves the yen due to problems in Japan, it could make the US dollar stronger. This, in turn, might make the Canadian dollar weaker. This affects everything from the cost of your imported goods to your overseas investments. At the same time, you need to watch global oil prices. Canada is a major energy exporter. Global economic health or weakness tied to Japan's situation directly affects oil demand and prices. Higher oil prices can strengthen the Canadian dollar, but it can also affect your gas prices. Number 2, be smart with foreign investments. Diversify. If your investments include ETFs, mutual funds, or stocks heavily exposed to Japan or other possibly unstable Asian markets, watch them closely. This doesn't mean sell everything now, but it's a good reminder to check how your money is spread across different countries and industries. See if your investments are diverse enough. Maybe add more stable North American investments or use global funds that spread risk across many regions. Regularly checking and adjusting your investments so you don't have too much in one area is always a good long term plan. Number 3, think long term with major purchases like cars and tech. If you plan to buy a new Japanese car or expensive electronics, know that prices might change in the coming months. This is due to taxes, supply chain problems, and currency changes. It's about supply and demand, with outside factors playing a big role. If you can wait for a few months, you might find better deals. Or be ready for slightly higher prices if global pressures worsen. Do not rush into big purchases if you are not sure about the price stability. Maintain perspective on inflation. Avoid panic decisions. Yes, global events bring uncertainty. And yes, we've all felt high prices recently. But remember, Canada's inflation is currently more under control than in many other rich countries. The Bank of Canada has been proactive. Don't panic and make quick money decisions based on the headlines so far. Focus on your long term money plan, your emergency fund, and living within your means. While global issues can affect prices, our own government's actions also play a key role in managing them. And then, lastly, stay updated on central banks' decisions, especially Bank of Canada. The Bank of Canada closely watches global economic pressures, including those from Japan. They consider those when deciding on interest rates. These decisions directly affect your borrowing costs for mortgages, credit lines, or other loans. They also affect your saving returns. Now, if you're renewing a mortgage, getting a new loan, or managing debt, stay informed about Bank of Canada's outlook and how global events influence. Now, we live in a deeply connected world. The idea that what happens in Tokyo stays in Tokyo is false. The global economy is like a complex living system. A major shock in one important part, like Japan, can send shockwaves everywhere. But this doesn't mean we panic. Panic leads to bad decisions. It means we plan. Japan's current economic problems are a big wake up call, not just for governments and banks, but for all of us. It reminds us to stay alert, to make sure our investments are diverse, and to keep learning how those seemingly distant global events can directly affect our daily lives and long term finances. If you found this video helpful, please hit that like button, share with someone you know, and don't forget to hit the subscribe button. I'm also curious to hear your thoughts. Tell me in the comments below, how do you think Japan's economic story will end? Do you believe Canada will be heavily impacted? Or can we get through this unharmed? I like hearing your ideas and having those discussions. Until next time, this is your guide to making smarter money decisions, one insightful video at a time. Take care and stay financially strong. This is Brijesh Kapoor, and I'll see you in the next one.